Thank you for tuning in to this video. We're just going to do an overall market breakdown today. I'm just going to go over the economic data and I'm going to go over the major indexes, my thoughts on everything that has happened today, and just what I think is going to be coming up in the future as far as price action and as far as just price movement overall. So yeah, let's hop straight into this video. Today is Friday, December 23rd, and we have a decent amount of economic data reports that came out. We got PCE price index came out at 0.1%. Previously was 0.4%. Core PCE was 0.3%. Coming in at 0.2%. And we got real disposable income coming at 3.2%. Previously 4.3%. So we saw that. We see real disposable income dropping off a little bit. Real consumer spending, we see consumer spending dropping a lot, which is weird to me because it's almost Christmas, so why would this number be dropping? But it just shows us the state that the economy is in currently. Durable goods orders is also dropping to negative 2.1%. Previously was 0.8%. And core capital equipment orders 0.2%. Previously 0.3%. So all of our economic data reports are missing. They're selling. They're selling the economic data reports. New home sales is up 640,000. That's a good thing. 605,000 was previous for new home sales. We're up on that. Median, it actually beat forecast, which is really interesting, by 40,000. So that is good for the real estate sector. And University of Michigan 5-year inflation expectations 2.9%. Previously was 3.0%. And then University of Michigan Consumer Sentiment Index coming in a little bit higher at 0.7%, 59.7%, which is a good thing. Was seen to potentially be the median forecast was 59.1%, and we beat on that expectation. So pretty good for the bottom of this list, but the top of this list looking pretty nasty in my opinion. Go ahead here and look and see what the markets are doing for us today. So yesterday, as I said, if you watched my video yesterday that I dropped, I told you guys that I liquidated my Nvidia position because it was down 111%. And it's one thing I want to say about that when it comes to my, being down over 100%. My fault on that one was that I was in a little bit too heavy, and so the amount that I was down, it wasn't ideal. It wasn't what I wanted to be risking. Now, with that being said, I think the ideal is risking 200%, right? So I'm gonna tell you why. 200% sounds crazy. But 200% of your max profit when you're selling credit spreads is a good amount that you can potentially handle. So that's a 200% of your max profit. So if you are willing to make $100, let's say, on a credit spread, because your probabilities are more in your favor, you got to be risking a little bit more. So if I was to make $100, I would be risking $200. Right, but out of 4 trades, if I'm trading below the 25 delta, I'm still going to be profitable at the end of the month. So that's how you got to look at that. So that's the game plan that I'm going to go with from now on. That's what I'm thinking about doing. Well, that's what I am going to do. That's what I'm putting into my plan. I'm just letting you guys know that because this is my journey. This is the stuff that I do when it comes to investing, and I'll just share that information with you guys. So yeah, SPX, we saw that candle yesterday, which pulled back aggressively off of the support area. Now I said yesterday, okay, what's going to happen today? Either we're going to continue to fall or we're going to reverse from here because of this bullish candle, which is red, but the fact that the buyers were so aggressive halfway throughout the day and the candle looks like this signifies to us that it potentially will be a reversal. This is a reversal candle in my eyes. You can see today we had a green day inside bar candle, but next week we want to see what that's looking like. I'm thinking that next week we're going to get a curl up, something like that, and start to head back up towards the upside. We do got levels up above here at 3,900, which we have to conquer for us to get back into this range. And then once we get back in this range, we have to some more fighting up here to do at 4,100. But I think that in a new year coming up after Christmas and stuff like that, I think that the market is going to see a decent rally. So that's what I'll be keeping my eye out on. Like I said, if I would have continued to hold my NVIDIA, let's take a look in the video right now. Let's see what that's doing. If I would have continued to hold my NVIDIA, I would have been okay. I would have been okay if I just held on to it because we have not breached that 150 area. And I probably would have been down less because of the theta decay today. I probably wouldn't have been down 111%. I probably would have been down, 70% or 80%. You know what I'm saying? So it was just a matter of me having my risk management. I think 100% of the max profit. Now that I'm thinking about it, and I have posted videos before, and I want to make a correction on that. I have said before that having, 100% max loss is too big. But I honestly now I'm switching my mindset, and I'm saying to myself, okay, 100% when doing credit spreads doesn't give you enough wiggle room. Because if you just wait a little longer, most likely the theta will eat away at the premium. You're going to end up losing less if you just wait, or making money on the trade, depending on, how long the trade stays above your strike price for. So I think 100% is a little bit too tight. Doesn't give you enough wiggle room. 200% is that sweet spot. I'd say you're down 200%, get out of that. If you're double what your max profit is, get out of the trade. You know what I'm saying? But if you're not double what your max profit is, it's no reason to close a trade, right? So, because let's think about it. Playing the 25 deltas, playing the 15 deltas, the trade is in your favor, especially if you're playing deltas below 20. The trade is phenomenally in your favor. You're most likely going to win those trades if you just have a slightly correct opinion or assumption on where the market's going to go. So, ES, like I said, I mean not ES, but looking at the SPX, my assumption on this is that we could, like I said, we got this big pullback here. Halfway throughout the day, reacted significantly off the 3750s support zone, and buyers are buying it back up right now. This is a bullish form. This is choppiness, but in my opinion, this candle signifies that we're most likely going to continue up from here. So that's what I'm expecting. I could be wrong. We don't know what's going to happen, but that's what just based off what I'm seeing right now. And then where's my cues? QQQ doing the same thing, selling off. We saw that yesterday. It wasn't exactly at any support, but I think that the Qs just had to do with the SPX did, what the S&P did. Although there is kind of like an ascending pattern here, which is interesting to kind of look at. It could, that's where it could see the psychological standpoint, the psychological support here, where we came down, then couldn't really breach that, and now we're seeing potential to the upside for the Qs. But overall, we still have levels up above that we have to breach at 270, 278, and 294. So we still got levels up above there that we have to breach. But this is a weird pattern here, but I do see this. Here we got a tap here, I tap here, I tap here. Just seeing what the price action is doing here, and a huge drop in implied volatility, which is crazy. That's a crazy drop in implied volatility. Stocks, VIX. We gotta go over VIX. VIX, what's VIX doing? I haven't looked at VIX in a minute actually, but VIX is sitting around the $20 area, so VIX is very low right now. Very low, still low. VIX is low. I guess yesterday, what did we see yesterday? Yesterday we saw that little spike in VIX. We got up to 24. Got up to 24 and then pull right back. And then we got this candle here. So VIX is sitting at 20 right now. Not the lowest it's been. but VIX is low. VIX is low. VIX is in that territory where I'm bullish. You know what I'm saying? It's not much volatility in the market. It's not much fear right now. You know what I'm saying? It's not much fear. We're at the lower levels compared to a couple months ago where we're up here. Up here at that 30s. You know what I'm saying? So we're not down at the very low levels like 18, but I'd say right now in the market conditions that we're in, anything below 24 on the VIX you're good. Anything below 24 on the VIX, you're good. Anything below 20, we're near 20, we're at 20 basically, we're good. You know what I'm saying? Uh, unless VIX starts to climb back up, markets are bullish on I'm bullish on the markets. Now people may say, "Hey, I'm not bullish. The bull market, the bear market isn't over yet." Dude, I'm bullish. I'm bullish on my stocks right now. I'm bullish on pretty much everything. And there's nothing telling me that the market is, you know what I'm saying? Like it's nothing telling me right now that the market is still in a bear market. We saw this nice rally up to the upside. Yeah, we've done this, and there's still a possibility that we could go down. But until volatility starts stepping back in, and there, until volatility starts to get into that 30 area, you know, I'm bullish. You know what I'm saying? And that's not, that's we cracked. The 208 SMA. I just think this is maybe some profit taking because it's near it's near the new year. That could be a factor. People are taking profits, hedge funds, big money is moving, big money's rotating. But as long as we don't get back down to these lower levels, I'd say as long as we don't get back below the 3700s. If we get into the 3700s, we are back into this lower range. But if we get back below the 3700s, okay, I have something to worry about. You know what I'm saying? Because that's bad. If we get down to this lower area, if you know what I'm talking about, like down in this zone, this is like the red zone right here. Like I'll do here if the market starts to get in here, this is like red zone. This is danger zone right here. This is the zone where okay, I'm cautious on taking bullish assumptions. I'm cautious on my bullish assumption because this is you know what I'm saying? This is red zone right here. That's all I'm gonna say about that. you know, um, but as far as stocks that I'm looking at Amazon right now. Amazon is still selling off. We have earnings. Do we have earnings on Amazon? No, we don't have earnings on Amazon. No, but Amazon's been selling off pretty hard. Um, and so I will be bullish on Amazon soon. I want to see Amazon starts to climb back up, starts to reclaim some of these SMAs. Then we got a nice gap fill here. So if we start to reclaim some of these SMAs, once we get to like 95 ish, I'm bullish on it. I think that's what's gonna happen though. I don't think Amazon's gonna go any lower. I could be wrong, but that's what I'm gonna be paying attention to. Is Amazon? That's probably gonna be my next play. Um, I got out on Nvidia, so only thing I have right now, only thing I'm sitting on is the SPX play, which I'm up on the SPX play. I'm currently up on that, so that's a good thing. But Amazon's gonna be my next one that I'm looking at. So with that being said, hope you guys got some good knowledge from this video. Just a regular overall market breakdown. Just wanted to get some of my thoughts off. I kind of look at this as YouTube being like my stock trading journal. My journey journal. Like you guys are on a journey with me of growing a small account. You know what I'm saying? I got a $3,000 account. Trying to grow it from 3,000 to six figures. You know what I'm saying? It's a tough thing, but as long as you stay consistent, you can stick to them rules. You can make it happen. So, hope you guys enjoyed this video. Hope you guys gained some knowledge. Like, comment, subscribe, and I'll see you guys in the next one.